Welcome back to the Coreco Couch, where this time we have a little bit of an exclusive because we are going to talk about the launch of Coreco Lifetime. And I'm delighted to have with me Louise Stevens. Welcome, Louise.
Thank you.
Are you nice and comfy on our new Coreco Couch?
Yeah, I like it.
Good.
It's good.
Well, so Louise is our senior advisor at Coreco Lifetime, a brand new section which is offering advice to those, looking to borrow in later life, so maybe over the age of 55. Louise has been a broker for over 15 years and is an award-winning advisor. She won the Best First Time Buyer Broker Award at the British Mortgage Awards in 2018. And Louise has a passion for helping people, especially first-time buyers, self-employed, and now older borrowers. So, Louise, Coreco Lifetime. I know this has been a bit of a passion project because you've been saying we got to do it for ages, and now we have. So, what's behind your passion for this area, and why, as a successful broker in other areas, did you want to specifically go into this area?
Well, as you mentioned before, first-time buyers, self-employed, they're more sort of specialist areas.
Yeah.
And I feel that those people need your help and really appreciate your help. And, there's certain challenges in that area where people, you can really help people.
Yeah.
So it's not transactional. It's, you're really, really helping. And throughout my career, I have seen other advisors in the later life lending space. And to be honest, I feel like I can do a better job.
Right. That's fair enough. Yeah.
I want to help these people, and I feel like there's so many myths out there around that market, and there's so many people that potentially need help and don't realise that they can get the help. It's just something that I really just generally want to help those people that need it the most.
Yeah, and that's something that's really come through, which is why we decided to actually start offering that, particularly because you were the broker heading it up, and that's really important to us, getting the right people to do these kinds of areas. So, do you want to explain to people watching what is this sector? What is it? What does it mean?
Yeah. So, first of all, there are a lot more lenders now that deal with later life lending. And
this is people generally over the age of 55 who are looking at borrowing?
Yeah, over the age of 55. So there are many lenders out there that lend traditional style mortgages, and they base those on income predominantly, whereas the lifetime mortgages, if the traditional mortgage is not suitable, then a lifetime mortgage comes into play. So anybody that's over the age of 55 that might want to purchase a property, so they might want to borrow a little bit extra to get a more suitable home. There are many people coming to the end of interest-only mortgages. I think 2032, there's a big, a very large amount of people coming to the end of interest-only mortgages that are going to need help. So they have no way, nothing.
And a lot of these people will be 60, 65 or 70 at that time.
Exactly. And some people just want to help their children to get onto the property ladder and see them actually enjoy that. With so many people sitting on a large amount of equity, that, there's many options. And the good thing about the lifetime mortgages, it's the amount that you can borrow is based on the value of the property. And the older you are, the more that you can borrow as well. It's also important to note that you do remain the homeowner. So you own 100% of that property.
So you explained before around, you got the traditional mortgage, obviously, which is based on your affordability and your income, and it will go up to a certain age of retirement. But the other types of mortgages, a lot of people have just heard of this thing called equity release, without really knowing what it means. So what other mortgage options are available for people who might not just want the traditional mortgage that ends at retirement?
Yeah, so there are many people that receive pension income or investment income, and do in fact want to service interest on a mortgage. And so there are options such as retirement interest only mortgages, and they differ from the traditional mortgage whereby they don't have an end date.
Right, okay.
And then you also have the lifetime mortgages where as well they don't have an end date, so that means that that's paid upon death or going into long-term care. And those mortgages, you don't, if you can't afford to make payments, or you don't want to make payments, in fact, you don't have to. However, you do have the option to make ad hoc payments. Doesn't have to be every month. You don't have to make contractual payments of any sort of certain amount. So yeah, there's a few different choices now.
Yeah, and typically, what amount can you borrow on say an equity release mortgage, and does that mean that you can borrow 100% of the mortgage, and what happens to the interest, etc.?
Yeah, so the value of the property and your age determines the amount that you can borrow. So some providers will lend, if you're much younger, they may only lend sort of 10 or 20% of the value, whereas some providers, may even... it's changing regularly depending on the rates, because the rates are sort of starting to come down a bit, so they will change. But, some providers will lend sort of around 30, some even sort of 45, even 50. If you have any medical conditions, you need to disclose those because it's actually a good thing. So actually you may be able to borrow more if you have a medical condition, or you may be able to save money on the interest rate as well.
And that interest then, if you're not paying it, what happens to that? Does that just roll up, and can it go to more of the value of the house? Or, because I guess that's a concern from people as well.
Yeah, so the interest is compounding, which means that the interest is charged daily, and then it's added each month, depending on the provider, but sort of generally. And then at the end of the year, so say that you owe 50,000, depending on the rate at the end of the year, you might owe sort of, as an example, 60,000.
Right.
You then pay interest the following year based on the 60,000. So the amount that you're not paying, so the interest compounds. That's the term that they use. You can protect that by making ad hoc payments, which again we do encourage people to make, because the majority of lenders will allow you to make 10% overpayments. So you can actually service the interest, or even pay a little bit more than the interest that's due, to bring that down. But if you leave it, it's compounding. The Equity Release Council, who basically police the equity release market, they have certain sort of stipulations to be part of the Equity Release Council, to protect the standards and the customers. They say that you're the products, and if the lender wants to be sort of associated with them, that the products must have a no negative equity guarantee.
Okay.
So the equity, if the house prices fall through the bottom of the floor, you will never owe more than what the property is actually valued for.
Yeah, so that's a big relief for people. Yeah.
Exactly. You can also have protected equity. So with your house price, you can protect, say, 10%, like an inheritance guarantee. So you can protect 10% of the equity. The lender will might lend you less, sort of based on that. But if that's suitable, you can have that in place as well for your reassurance.
Okay. And so, that's interesting. That's one of the most common myths around it.
Yeah.
Another one is it's too expensive. It's so expensive that will cost me so much money. What's the reality in terms of rates and that people will pay from lenders?
So there are actually rates at the moment starting with a 5.
Right.
So they're actually in line with, some of the traditional mortgage options. So the interest rates are actually very competitive.
Okay, so rate wise, there's a bit of a myth that they're much more expensive. But what about fees?
Yeah, so typically there are no fees paid up front to start with. So you'll have advice fees. Actually, here at Coreco, we actually only charge £695.
Right. Okay.
And we don't charge that fee until completion. And so if the application doesn't go through, or you think about it and you change your mind and it's not for you, then there's no fee at all.
That's a hell of a lot cheaper than a lot of the fees that I've heard of.
Yeah, well, again, this is another reason why I want to help people, because you don't need to charge those fees. We're helping people. It doesn't need to be that expensive.
Yeah.
The lenders may charge an arrangement fee that can be added onto the mortgage. You would pay interest if you can add that, if you don't have any savings. But we would look at the total overall cost of the borrowing. So it might be a higher interest rate with a small fee, or a low interest rate without a fee. A lot of the products, generally don't have fees. There's a free valuation, so you have no valuation fee.
Right.
And typically legal costs are £995. For the standard legal fees. So, there really is not, it's no different. In fact, often cheaper than a traditional mortgage.
Yeah. And so give me some, I like to paint pictures, phrase that I use. So give me an examples of maybe a few people who you've dealt with or you've seen who you've been able to help, or people in this area have helped.
Yeah, so earlier on in the year, I had lovely couple who unfortunately Mr. had cancer quite a few years ago, and he's had a trial treatment and that went really well. He was cured from his cancer.
Wow.
But a few years ago, he started going blind.
Right.
And so they needed to move. They couldn't get around the house. It was too big. They needed to move. So they were looking at smaller properties, ground floor flats. And the agent at the time, she sort of said to them, like, they couldn't find anything. They were really struggling. And she said to them, I think you need to speak to Louise and see how she might be able to help you. And we went through the lifetime mortgage options and we were able to lend them a bit more money to buy, in fact, a bungalow.
Right.
So they got a much better property.
Yeah.
The daughter was really happy because, the daughter's main priority was that her parents and her dad could get around. She also saw the benefit in buying a bigger property, because what a lot of people forget is that house prices, we can't guarantee it, or, we can't rely on it, but house prices have gone up over, every year. So, you can take that into consideration, and a higher house price may gain more if prices do go up. So, that was sort of more suitable for them. So, we managed to get them a bungalow. I had another lady who, again, sold and couldn't find. She had to move out of her house. She couldn't find. She was looking for a flat in the area of London that she was looking. All the flats had short leases, really expensive ground rent and service charges. And she just was really struggling to find something. So we managed to just top her up a little bit. And it was the difference from getting a short lease, a property that would have cost her more money in the long run and paying ground rent and service charges, to getting a flat that was share of freehold. So monthly, actually, she can now, she doesn't have to afford that.
Yeah.
And she's got a property that's ready and doesn't need any maintenance. So that sort of really helped her. And another example was a client who was purchasing a property, and they really needed that little bit of extra money for the property. And the parents had a lot of equity, and the parents wanted to see the daughter to buy a new property and actually see her happy in that house. So we released some money for the parents to help towards a deposit.
Yeah.
Help the daughter get her dream home.
Yeah.
And the parents are now going to be able to, see her in that house and get to enjoy that.
So it's a good way of passing down some family wealth without having to sell the parents' property.
Exactly.
Yeah. So actually, there's some good examples there, and a lot of them involve like the children. Is that something that you have to bear in mind? Because obviously, when you're not just really advising the borrower, aren't you? You're also taking into account the children, because that's their potential inheritance that's being used up, so to speak. Is that important for you to actually, embrace the whole family within your discussions?
Yeah, absolutely. So the main priority is that the outcome is the best outcome for the estate.
Yeah.
So, if somebody doesn't have any children, then it's a sort of a different conversation, but they may still have nieces and nephews that they want to consider. One of the ladies I helped recently, she wanted to leave some money for charity. So, the client doesn't need to, they don't have to have them as party to the conversation, but we, encourage them to, make sure that they have had that conversation, because the children might be able to help service the interest, which will help protect their equity. So, they might have a little bit of money that they can put every month as well. So there's plenty that we can discuss with the children. Also making sure that the clients have like powers of attorney set up, and people that can, help and make the right decision for them in the future as well. And all of that, it's the whole sort of inheritance and tax planning and everything like that we, obviously can advise around and encourage them to get advice on.
And are there any sort of last top tips you can give people who might be, looking at this area and think, I don't know I don't really know what I need?
Yeah, I mean, just pick up the phone, talk to us, because not many advisors can give holistic advice. So they may only, be able to speak to you about a lifetime mortgage and then pass you on to a colleague, about a traditional style. Whereas I can give that holistic advice and, really make sure that we understand what's important to the client. Just pick up the phone. That's my top tip, because there's no right or wrong answers. We can do a Teams. I can go to the person's hat if the person wants to, if they want a face-to-face meeting and they want to speak to me, in person, it's not a problem. Like we will cater for that. All of our calls are recorded for the clients, sort of reassurance and protection as well. It's just about speaking to the right advisor that's going to look after them properly.
Yeah. So that's a really good point that you make, that you can offer the normal mortgage as well. And actually,
exactly.
I know that I've passed you a couple, and colleagues have passed you a couple where actually you've gone, actually, no, I can actually get them a more normal mortgage, because there are, say, some building societies who might do a more traditional loan at a slightly cheaper rate. So you've got that option.
Yeah, I've helped somebody recently, age 67 and 79, and we got them a 40-year repayment term mortgage based on their pension income.
Right.
And it was actually, it was £10 more expensive than what they had originally, but £60 of that was coming off the capital.
Yeah.
You know, technically it was £60 cheaper in real terms.
Yeah.
So there are options out there, and it's important to make sure that they're all explored.
Yeah. What are you getting excited about? What are you looking forward to most in this area?
Helping people. It's just everybody's so nice and friendly. You know, all the business development managers that we deal with from the lenders are really helpful, and you know, we all have the same end goal. We all want to help our clients, and it's just the outcome for the clients. It's just really rewarding.
Yeah,
like already it's so rewarding.
Yeah.
So
I can see that. Yeah. No, it's great, and that's why you're the right person to do this, Louise. So thank you very much for your time. Wish you all the best of luck with it.
Thank you.
And thank you very much to everyone for joining us on the couch. And Coreco Lifetime is out now, and Louise is available to talk to you if you need.